Hey everyone, Joe from Avalon here. In this video, I'm going to dive into the tricky topic of how to pay family members from your Canadian business. We'll look at the benefits of hiring family members and also the potential pitfalls to avoid, including how to keep the CRA happy. Finally, I'll explain how to go about actually paying family members for work that they do within the business. All that and nothing else coming up. First up, the benefits of hiring family members. These benefits range from financial savings to strengthening the business culture. Let's explore some of these in some detail. First up, one of the most significant benefits of hiring family members is the potential for income splitting. By employing a family member who falls into a lower income tax bracket, you can distribute income within the family, which may result in a lower overall tax burden. This means that instead of you paying a higher tax rate on all of your income, part of it is taxed at a lower rate when paid as a salary to a family member. There is also some opportunity for future tax savings by helping family members build RRSP contribution room. When family members earn employment income, they also accumulate RRSP contribution room. This contribution room can be carried forward and used in the future when they might have higher income. For instance, a spouse who works part-time while raising children can save up this room and make significant contributions to their RRSP later on, benefiting from compound growth over time. We've posted an in-depth video covering everything you need to know about RRSPs. Learn about contribution limits and deadlines, how to save on taxes with RRSPs, spousal RRSPs, and the withdrawal process by clicking on the link in the description below. Employing family members also means that they contribute to the Canada Pension Plan, or CPP. These contributions help build their own retirement benefits. Starting CPP contributions early or continuing them during periods where they might not otherwise be employed ensures family members are better prepared for retirement. Next up, we'll have some tax benefits related to employing family members. Salaries paid to family members are legitimate business expenses and can be deducted from your business income. This reduces the taxable income of your business, lowering the amount of tax your business owes. There are also some types of tax credits that aren't available unless a person is earning employment income. So depending on the type of income earned from the business, family members might also be able to claim non-refundable tax credits, such as tuition or donation credits. Lastly, there is the benefit of working with loved ones. This can be a bit of a mixed bag, but if the working relationship is a good one, then it can be quite rewarding to work with family members. However, it tends to go both ways. If work relationships are strained, that can also bleed into your personal life. And there's our natural segue into the potential downsides to hiring family members in your business. While hiring family members can bring many benefits, it's important to be aware of potential pitfalls that could arise. Here are some of the key challenges you might face. Hiring family members can sometimes be seen as favoritism, which may affect the morale of other employees. Non-family employees might feel overlooked or undervalued if they perceive that family members receive special treatment or unearned promotions. To mitigate this issue, ensure that family members are hired based on their qualifications and that their performance is evaluated fairly, just like any other employee. It's always good to maintain transparency in hiring practices and be clear about the roles and expectations from the beginning. Next up, we have some potential compliance issues. The Canada Revenue Agency, or the CRA, has specific rules regarding the employment of family members to prevent abuse of tax benefits. Non-compliance with these regulations can result in penalties and increased scrutiny of your business. It's important to treat family members as if they were unrelated employees, aka arm's length employees. This means paying them a fair market wage, documenting their employment terms properly, and ensuring they perform genuine work for the business. And as you might expect, mixing business and family can lead to personal conflicts that affect both work and home life. Disagreements over business decisions can strain personal relationships, making it challenging to maintain a harmonious working environment. I've seen this more than a few times. It's important to set clear boundaries and maintain open communication to manage these dynamics effectively. Lastly, there are some potential negative financial implications that can result when hiring family members. Family members might not always meet the performance standards expected in a professional setting, which can impact the overall productivity and success of your business. This can lead to difficult decisions about retaining or letting go a family member. Also, if the business faces financial difficulties, the pressure to support family members through employment can add to this strain. It can be a good strategy for spouses to diversify risk by having different employers. Due to the close nature of the relationship, CRA has some specific rules in place when paying family members in your Canadian business. Here are some key considerations to keep the CRA happy. The CRA requires that you pay family members a fair market wage, similar to what you would pay a non-family member for the same role. This means the salary should be reasonable and aligned with industry standards. Paying a family member significantly more or less than an unrelated employee for similar work can raise red flags. Keep thorough records of how you determine the wage for your family member. This might include salary surveys, job postings for similar roles, or consultations with industry experts. Which leads me to the need for proper documentation. Have formal employment contracts in place for family members. These contracts should outline the job role, responsibilities, salary, and terms of employment, just as you would for any other employee. Maintain detailed job descriptions and require family members to track their hours using timesheets. This documentation helps demonstrate that they are performing legitimate work for the business. Regularly evaluate the performance of family members and document these evaluations. This shows that their employment is based on merit and that they are held to the same standards as other employees. It is also important to ensure family members are paid regularly, just like any other employee. Irregular payments can raise suspicion about the legitimacy of the employment relationship. Set up a regular payroll schedule and issue paychecks or direct deposits consistently. Deduct and remit the appropriate taxes, Canada Pension Plan contributions, and employment insurance premiums for family members. Provide them with T4 slips at the end of the year, just like you would for any other employee. Lastly, it's important to treat family members as arm's length employees, meaning their employment terms should be similar to those of unrelated employees. This includes their job responsibilities, hours of work, and salary. Ensure that family members are performing genuine work that contributes to the business. Tasks should be necessary for business operations, and the work should be consistent with their job descriptions. It is really all about ensuring that you're treating employed family members the same as you would treat any other employee. Pay them market-based wages, ensure that they have the same duties and performance reviews, and be sure to document everything properly. Our last topic is all about how to actually pay family members from your Canadian business, and it requires a bit of planning and adherence to CRA guidelines. Here's a step-by-step guide on how to properly pay family members, ensuring that you keep the CRA happy. The first step is to decide if the family member will be an employee or an independent contractor. Employees are on payroll and receive regular paychecks, while independent contractors provide invoices for their work. For further guidance on this topic, refer to our blog post on determining if your worker is an employee or a contractor. It's linked in the description below. Your next step is to establish a fair market wage for the role. Use salary surveys, industry standards, and job postings for similar positions to determine a reasonable salary. Ensure the wage is neither significantly higher nor lower than what you would pay an unrelated employee for the same job. The annualized Randstad salary guide is an amazing free resource for determining fair market salaries for the job and your geographical location. You can find a link to that in the description below. Keep detailed records of how you determine the wage. This documentation is helpful when demonstrating to the CRA that the salary is fair and reasonable. Then, once the employment type and salary are determined, set up your payroll system. For detailed guidance on setting up and running payroll in Canada with our favorite software, refer to Avalon Accounting's payroll guide linked below. Alternatively, you can watch our video series on how to run payroll in Canada for a simplified manual method of running payroll. Establish a regular pay schedule, whether bi-weekly or monthly. Consistent payment schedules help maintain the legitimacy of the employment relationship. For employed family members, you'll want to deduct income tax, Canada Pension Plan or CPP contributions, and potentially employment insurance premiums from the family member's salary. Then, at the end of the year, provide the family members with T4 slips that detail their earnings and the deductions made. This ensures they are properly taxed on their income. By following these steps and leveraging resources like our payroll guide and video series, both linked below, you can ensure that you are paying family members properly while staying compliant with CRA regulations. That does it for this video on paying family members. Next up, I recommend checking out our featured video on how to pay yourself from your corporation, where I compare salary and dividends as options and show you how it all works. Lastly, while we absolutely love bringing this content to you, our day job is providing reliable accounting, bookkeeping, and payroll services to Canadian businesses. If you have an incorporated business and are building your business to $1 million or even $5 million in revenue and are interested in our services, head on over to our website and schedule a meeting. We'd love to hear from you. All right, thanks for watching, and I'll see you in the next video. Cheers.